Well, good morning, Chris. Thanks for being here with me doing this video for my landlords. And Chris is a loan officer with Academy Mortgage. We've done quite a bit of business together, and you're somebody I trust. I know you're thoughtful and involved in the industry. You know what's going on, so appreciate
Thank you
you
for having
taking
me, James.
some time out. So tell us a little bit about what's going on in the market, rates, guidelines, things like that.
So rates, they've been kind of all over the place, but they're starting to stabilize a little bit, especially for the conventional products. You could figure, on non-owner occupied, like investment properties, you're going to be in like probably around the mid fours on an interest rate. As far as like government products, they did change some guidelines. Like we require 660 minimum FICOs now for our FHA and VA loans. We've suspended a couple different loan programs, mainly like the adjustable rate mortgages. We're really only doing fixed products right now. Same thing with manufactured homes. We've suspended those for the time being, and that's kind of that's more or less like industry wide. Okay, but your standard like conventional loans, they're still good to go. They haven't made any major changes or anything like that. No FICO score changes or anything like that, or loan to value, anything like that. With the non-qualified mortgages, kind of like the more out of the box loans, they have put a halt to quite a few of them, but there are still a handful of options out there.
Explain that a little bit more. So what the out of the box, it's mostly income type stuff.
Yeah, so it's like maybe for like the investor who maybe doesn't show a whole lot of money on paper. There's bank statement type loans, or there's asset qualifying loans that are out there. We have a small niche of brokered loans that we can send them to now. But for the most part, most out of the box type lenders they put a halt to everything. Same thing with jumbo loans. A lot of jumbo loans right now are on a halt until they get this COVID-19 under wraps.
And for everybody, explain what a jumbo loan is and what amount it starts at.
Sure. So jumbo loans, it varies from county to county. So if we're speaking in Riverside County, it's any loan that's above $510,400. Okay. So anything above that amount is considered a jumbo loan in Riverside County. And like I said, it does vary from county to county. The limits go up. I believe Orange County and LA County, they're upwards of like anything above like 765,000. I don't know the exact number off the top of my head, but anything above like the $765,000 mark would be considered a jumbo loan.
I've seen my hard money lenders start to ask for a little bit bigger down payments.
Mm-hmm.
Which might go 90% of purchase price, or in some cases, if you had a good enough deal on a flip, they might fund all of it.
Sure.
But now I'm seeing them all ask for 20% down, 25% down.
Mm-hmm.
They haven't changed fees or things. They're doing a drive-by appraisal. Talk a little bit about what the appraisal process looks like right now too.
So, I mean, it really goes off of what the appraiser and the homeowner feel comfortable with. We are allowing, so is Fannie Mae and Freddie Mac, drive-by appraisals, where essentially the appraiser can drive by the house, check out the quality of the house from the outside, and he will request that the homeowner send specific pictures to them so they can fully do their appraisal. So, I mean, they're still doing these appraisals and everything like that, but they are taking a little bit longer than normal. Nothing out of the ordinary. Instead of getting an appraisal back in 48 to 72 hours, we might get it back in like 4 days instead of 3 days. So it's nothing like crazy or anything like that.
Is there extra scrutiny when someone does show income on their job type, things like that?
If you're trying to do like a non-qualified mortgage, maybe like an investor type loan, or
yes.
Yeah.
Are they worried about where tenants? Are they worried about what their tenants' income looks like? Things like that.
To my knowledge, no. They want to see specific items. Like, it really depends on if you're going the bank statement route or how you're doing it. But they'll specifically tell us, hey, let's not fill out any sort of income for right now. Let's just get their bank statements in. Let's see what everything is, and we'll assess everything. Because a bank statement loan, all they want to see is essentially enough assets coming in per month. They don't necessarily want to see like what you're taking home or anything like that. They wanted to see that there's enough cash flow coming in every month.
Okay. So we touched on appraisals. We've touched on guidelines.
Mhm.
Reserves, have reserves gone up at all? Asking
Yeah.
for
So
investment.
some products are, they'll require a certain amount of reserves depending on the debt to income ratios. Like I believe anything with us, anything above 45%, we're going to require 6 months of reserves. Um, Fannie Mae did tighten up a little bit. Fannie Mae and Freddie Mac did tighten up a little bit, but it is one of those things where it's like the stronger the stronger the buyer, the stronger the client, as far as a credit score and debt to income ratio and everything like that. The looser the guidelines.
Right. So that's similar to the way it's been. And 40, you mentioned 45%. You're talking about DTI, debt to income ratio there.
Yes.
So
Yeah.
interesting. So credit score still rules all.
Mm-hmm. It's
That'll,
still like on a standard, conventional loan, regular conventional loan. The minimum is a 620 FICO. They haven't changed that or anything like that. They do require if it's a investment property, we do require a minimum of 15% down. Okay.
that's it.
Yeah. But other than that, like the guidelines haven't changed. We didn't add any other specific overlays or anything like that. Other than if it's, income, or if we're doing like verification of employments, we're required to get the verification of employments in within 72 hours of locking the interest rate on a loan. And that's our specific overlay right now.
So let's say a person was, well, so I guess if a person was retired, they'd have retirement income, they'd have the income from the property. That'd probably be a fairly easy,
Yeah.
just if
If
credit
it's
was good, that'd be a fairly easy transaction.
Yeah, definitely. So, I mean, it's really easy to verify, like, fixed income, like Social Security or pension or anything like that. Pension award letter works, 1099s work, bank statements showing that that money is being directly deposited works. And then, to show rental income, we're just going to ask for the taxes. And what we're allowed to use is 75% of what the rental income is. We can use that as monthly income.
And what about any changes to cash out?
So the cash out, they're still at 80%. FHA, they changed it from 85% down to 80%. So they tightened up on cash outs with their loan to value. And then VA actually changed from 100% cash out. Now they are 90% cash out. That's where they'll cut us off at 90%.
That's a big change, but I can see
Yeah.
what makes sense.
Mhm.
Well, I think that's pretty good. I covered a lot of ground there pretty fast for me.
Yeah, right.
So yeah, that's good. So it's not in the market, at least overall on the lending side, there's some tougher guidelines that are in place.
It's nothing like too crazy. Like the market's still strong, rates are still strong, especially here at Academy Mortgage. So it's one of those things where it's kind of business as usual for us, but we just kind of we have to get a little bit more creative sometimes because we don't have all the products that we had. I fully expect to get those products back and our company open these products back up once all this COVID-19 is over with.
I remember in 2000, when we came out of 2008, lending guidelines changed. They were being updated almost daily. So you tell somebody something at the beginning of the day, and it may not be true. You're telling a borrower something at the beginning of the morning. At the end of the day, the guideline might have changed on you, and it was extremely difficult. It doesn't sound like you guys are experiencing anything like that right now.
No, they're pretty good about, they let us know up front if anything changes, but it's not like, it's usually just like a product as either suspended or they've lifted the suspension on it or whatnot. But it's not like the only real change we've seen is the FICO scores on government loans. Now we require minimum 660 on them, and the down payment assistance type loans did the same thing. A couple months ago, they jumped from 640 minimum FICO to 660.
Okay.
Yeah. So it's nothing like out of the ordinary. Rates are obviously a little bit more volatile now than they were before. You're quoting a rate at 9 or 10 in the morning. By 2 o'clock, it could be something completely different. So it's one of those things where it's hard to like talking to anybody about, oh, today's rate. Well, it's not today's rate. It's right now's rate.
Right. And
Yeah.
are you encouraging people to say if this is a rate they're interested in, they've got to make a quick decision?
Yes. If it's something that they're on the fence about, I always say, let's if this is something you want to pursue, let's lock it in, because last thing we want, we've seen some major swings. We've seen some major positive swings and some major negative swings. And you definitely don't want to be on the wrong side of the swing. So if it's something that you feel comfortable with right now, let's just go with it.
You talk a little bit about what makes rates swing.
So it's basically, rates are heavily influenced by the bond market. Okay. So when there's turmoil in the world, it's a bummer to say this, but when there's turmoil in the world, that's when the rates get usually pretty good. And it's because everybody's taking their money out of the stock market and throwing it into the bond market. Okay. And then when things start to get better, like yesterday, we saw the stock market rally a little bit. And so in effect, and people were taking their money out of bonds. In effect, we saw a little bit of a price deterioration yesterday. Like rates got a little bit worse than the day before. So that's an easy way for, your landlords or anybody you work with. Keep an eye out on the bond markets. And usually when the bonds are strong, you can expect that interest rates are probably doing well.
Okay. Good to know.
Mm-hmm.
Well, thank you. You covered a lot of ground fast, and
Yeah.
It's all really good info. I know you did this for my agents yesterday, so I appreciate you doing this morning.
Of course, anytime. Thank you for having me.
Today's Saturday, April 18th. So you have a good day, and I appreciate it, man. I always appreciate it.
Of course, James. Thank you, sir.